Good morning. Well, still going nowhere for the moment. Still holding 430 on the spiders. A little bit of a change, meaning prior mornings, the gap down was erased. And so, things were higher and now they're lower. We'll see if that actually means something, just an observation. Let me just, okay. So 431-ish, really just a non-event here. At the bottom of the red bar, 5-minute trending down, support at 430. And look, if it gives way, maybe today's a day for lower. Just so far, just sideways, and looking at it from how we always do with a wide range bar. Is it trading in the upper half or the upper third? Well, it's trading above the top of the bar. So this continuing to buy the dip with yesterday's red bar. Are they ready to throw in the towel? Well, it's a greater possibility today with a failure after 3 days to push up into what I'll call the sell zone area, which normally what it would be on a move up on a gap down reversal like that within a downtrend. Everybody's still waiting for some kind of I don't think there's going to be any resolution immediately, but some kind of information to suggest what this market's going to do, meaning one way or the other. And we'll go through the charts as we always do. We'll look at SPX. And so let's see here. The top end, just 434, 434. So, well, I'll be watching it, but I would suggest if you're not watching this, set an alert there if it gets up there just to see if it clears it. Well, that would suggest it's going to go up to the top of the range there. Breaking below 430, I think then it goes lower, because as this went up from there yesterday, another little short covering rally at the end of the day, there's not going to be much to stop it from going down because of the way it went up. Okay, so SPX 430, see where this is in the bottom of the red bar. There's still huge premiums down below, which, unless something really gets out of hand, it's hard to imagine why they're going to go down there, but that's the risk always, the unknown. Just looking at the futures, it was just a neutral day above the prior day's low. And one of the comments yesterday at the end of the day, my comment was, well, whichever way it goes on either side of this bar, yesterday's bar, is the direction I think it goes. So, went up, pivot high, pivot high, pivot high, break below, downtrend, sell setup coming down below. And, there's the low of the day there. We'll see if it holds or 4,300 holds again. It's just a difficult time when markets are in a downtrend, but still directionless day to day. So until that change, but a break below yesterday's low will be the start, I think, to some movement to the downside. So at that point, selling a put spread, that's where the premium is. Well, call spread. That is going to be within striking distance. 4430. Well, 4435, 4440. I think that could be a no-brainer. Again, we have a market that is news. So look, if 4435 is a reasonable call spread up in this area of resistance. But if we see prices moving to the top of the range there, well, that could open up the door. Well, let's put it this way. When I, just historical patterns. So I got a little library in my head, so to speak, of historical patterns. So what would be the most bullish would be to break this low and a retracement right back up again. Then I would believe it's going up there tomorrow. But as for today, I would say it's unlikely it's going to go there, 44.35-ish. That being said, you can go down to 41, 45, way down here. So breaking here will open up the door. So I think waiting, maybe, I think this thing will take direction one way or the other, probably within the first 15, 20 minutes or so. So I mean, probably prudent to wait for that. But, and if it starts going down, it could probably even go lower. So if it starts to accelerate lower, the premiums will increase. There's always this balancing act of time versus price movement. So it's always, just think, oh, if it goes down, I'll get more premium. Well, if it goes down fast, you will. If it goes down slowly and the time is clicking, that premium tends to evaporate. So that's why I say it's a balancing act. But anyway, way down here, which option traders are still looking for that big protection. And so does that stop it from going down? Not necessarily. They're looking for the protection. So the premiums are pumped up. And unless we get something, a pattern, and this is the beginning of it. If it breaks this low, it does open up the door to lower. So that's what I'm saying. Wait maybe 15 minutes or so to see if it breaks those pre-market lows and starts heading lower. All right. NASDAQ inside day now at the bottom of the range. Same pattern again, right? Something that we've been talking about is that these intraday patterns have been so similar in what they're doing, and it's not always that way. It was that the move up, pivot highs, it breaks lower, trending down on the 5-minute. So over here, just nothing. Just, kind of a trading range. Continues to be, right? We're just looking at it from a different time frame or point of view as to what's happening here on the daily chart of just marking time going nowhere. Everybody's just waiting. I mean, what's going on? We all know what's going on. But anyway, institutions are waiting for something here. Dan's telling me Powell's speaking today. I mean, what's he going to say? I mean, what would the markets do if he comes out? I mean, not that he's going to tell us, I would think, but, saying, oh, because of the Russia thing and the price of oil going up, maybe we're not going to raise interest rates. I mean, let oil keep going higher. I mean, how are they going to, look at this. I mean, the longer that they wait, the more. Right. I know, Dan. He said a quarter point. Before it was half a point. Maybe it'll flip back to half a point. And the markets will come slamming down because, once it has expectations of something and it begins to get filtered into what's happening, and then there's a surprise, so kind of a tricky time. Dow. Same story, same pattern. Russell, same thing. Right? What can I add to what I've already said? Pretty much nothing. Bitcoin down a little bit here, up at the top of the range, so makes sense. We'll see if it can stay at the top of the range. We had this retest down here and the little breakdown failure, the range expansion. So now with resistance, it's dealing with that. Yep, this was the little video that I made yesterday, and what we're going to be talking about today in MT Live, M&W patterns. We love them. We looked at crude oil, silver. Up here, momentum move up at the top of the range. Always got to be looking to the left. So why we look at multiple time frames? Because it compresses the data. It kind of takes away some of the noise, if there is, as well as being able to look further to the left. Could always scroll that over and see what's there. But sometimes having a little extra chart there just saves a little movement with the mouse. Gold moving up at the top of its range there. What else? Transports, reversal day yesterday, like everything else, but against the bottoming tail bar. And so we go into another day waiting to see if prices will take a direction one way or the other. Yesterday was a start to it. Now we'll see if it wants to follow through. Dan pointed out Powell is speaking, so there's that uncertainty. Anyway, if it breaks the lows, if the spiders, right, break down below this 430 level, which they've been bouncing up, it hit it up and I broke down through it. I thought maybe, here we're going to go tomorrow. Things are going to pick up, bounced up again, down again, up again. It's just been, let's call it an Alka-Seltzer trading range type of thing, back and forth, just waiting for things to pop. And interesting, that the dollar is holding up here with, interest rates. Well, it's starting to flip back up again. Things are really erratic. And we'll just have to wait for things to settle down. There was this big drop in the 5-year and, of course, the 10-year. And I looked for a moment at these, what happened here with the distance between the very long-term rates and the very short-term rates and how this came down. So this is something that will unfold. And from a longer-term point of view, if this starts to drop, this is going to be, I think, a very bearish implication for the markets. Because it's twofold in that you've got a Fed that is going to raise interest rates, which this IRX is the 3-month, which anticipates it as well as the 5. And this coming down tells us that there are concerns, as with this inflation and the economy. And so the economy is slowing and now the demand of money begins to decrease. And as this starts going down, while this stays high, brings this yield curve chart, it's got a long way to go before it gets down to the problem area. But this is a fast move in that direction. And if that continues, well, these markets historically are going to have a very nasty time ahead, but we don't have that yet. We'll have to see how it all unfolds over time. But this is one of the things that part of our factory work, to keep an eye on what's happening in the broader markets on different levels. And we did that MT Live on technical fundamentals a couple of weeks ago. And this is one of the things that we monitor, and it doesn't change too often. But when it does begin to change, if you're not aware of it, you could certainly get blindsided very badly, because you go and look at the historical charts of what happened here, and it is a very, very reliable piece of information. And this was just before coronavirus hit. And you go back and look at, in the past, and it's just something that should be in every trader's and investors' toolbox to know what this information is doing. So all yours, Dan. 175, 0 DTE, SPX 175. I think that's very reasonable, McGraw. I mean, look, we look at the trend, we look at the patterns, we look at, is there a void, which clearly there is. But so if it continues to drop to get to 175, there's support. And one of the things that, among the things that we have to consider what a spread is, especially with 0 DTE, like what's reasonable? Well, that's reasonable, right? Down there, and that it won't get there. But if it does, is there something in the way to stop it? Yes, there is. In addition, looking at average true range day to day, for it to go from yesterday's close down there would be a huge bar. So even though you would probably be, at a point where you're choking on that, that going against you, the probability of it bouncing from that point would be very high. So what will we look for? Something going against us. So we're looking at it from a very reasonable, objective point of view would be tick extremes. Are the ticks beginning to make higher lows while it's going down there? Is the put call ratio rising? What is the volatility index? Where is that? So we have our intraday trader toolbox to guide us as to, are we totally screwed here with this position, or should we consider maybe adding to it? So, I mean, that's part of what, comes with experience and watching our gauges, right? So you look at your car and you look at the water temperature and the oil pressure and the tachometer and all of that. And that's what we do as an intraday trader, looking at these, gauges, market internals as well as intermarket analysis. And those kind of things take us away from, outright fear, of a position that's gone against us to, hey, all of these things tell us that the probability of change happening are very good. So, one of the things that we talk about in the swing course or the MTS course, as far as trader psychology, is if you're in a bad position, what would you tell your trading buddy to do? Because it's easier to give advice when it's not your money that is being, hit in such a way. So the whole point is to get an objective, view of it versus the emotional, hysteria that might be happening at that moment. So all yours, Dan.
All right, good morning. Yep, we had that bias into the close, whatever direction we go up or down today. And as Greg just went over, nothing's changed. That's it. Now we put on a call spread, a 1 DTE call spread, the 442s, I think. So that's still totally fine, even though this is gapping up. I'll bet with a very high degree of certainty that we're still going to open up with a profit because of time decay overnight and volatility contraction. The Dow 30, all lit up solid green with the exception of Visa here. No pattern though. With oil gapping up. Look at that. Such pain at the pump. That's pretty sad because it is so preventable. But that made me look at jets here. Biggest expense is employees and oil for jets. Now, surprise is actually gapped up, but look how deep it is into this bar. So there's still no pattern. It's coming to the bottom of the range, but we don't touch it unless there's a pattern. I mean, a reversal. Russia here. I told you I'm watching this. I'm just curious, number one, to see fundamentally what it does. I actually did read an article in the journal today. They were talking about exactly this, these Russian ETFs. And I didn't know this, but the paper said they shut down trading in equities this week in Russia. And so part of the problem with this, they were saying, they don't know how to calculate the value of it. I mean, think about that. And that's a valid point. And that was kind of my point too, of war and this and that. And every day I'm seeing them getting more distance. Boeing said he was going to stop doing business with them. ExxonMobil is stopping. And so, okay, there's all that news. What's going to happen to the equities that are in this than this ETF. But it's still going down. But you know, once I get a bullish reversal, I will be. My bias would be to be selling out of the money puts on it. Oliver asking about Alpha Golf first swing. No. There's no pattern, number one. Number two, it's just right smack at the top of the range. And number three, it's a bearish gap down. So it looks more like a day trade short with the price void here. So I see nothing there. Compare that to this. I know one's gold, one's oil, but you know, for the new people, this is my little weekly chart. This is my monthly chart, and I look at those to see how much can this thing really get going on bigger time frames. You know, you got resistance over here, but the monthly is telling me if oil keeps going, this could go to 75 bucks. And so I have a daily closing breakout. So there's no great entry right here, but that's now going on my watch list. I heard some fun lady or whatever. And then, you know, it's like they read from a textbook when I get questioned. Oh, so what are you doing right now? Oh, I'm looking for value. I'm looking for this and this. And, you know, it's like it's the same ad nauseum answer every time. But I kind of shook my head when she says, oh, we're looking for value, like in the oil sector. And I'm like, really? Where were you valued down here at 45 bucks and at 50 bucks and at 57 bucks? Now you think it's a value? It's just I shake my head of, you know, what people say and do. All right, so tech here. We had a nice, today's a Wednesday, so Monday had a bearish gap, but now yesterday negated it. And we're seeing strong uptrends daily, weekly, monthly. So you know, you got a topping tail yesterday, but this is going on my watch list. Oh, LMT, we were watching yesterday. Some of these militaries have gone vertical. And we were talking about it yesterday morning in the green room, but we were saying there's no reversal yet, unless you're just talking about a scalp. So today, with this bearish gap down under this end of day base, this is what we call a bearish gap surprise. So I'm just going to throw out their 10-minute low, 15-minute low. I don't know. Let you know, the longer you wait, the more confidence you have, but it can move. But this is a beautiful 2 DTE call spread candidate. So that's on my list. So Greg, we really should scan the entire military sector. If anyone in the green room wants to help us do that, NOC has wider spreads, but LMT looks great. Ford doing some kind of reorganization, whatever. Nice gap up, but no pattern. JMF, no pattern. Oh no, wait, JMF. Okay, I'm not seeing the print, but it's showing here 36 bucks. So, hey, do you all know in MT Live when we have that one slide where we show the 9 money patterns? This is actually one of them. If we open up at 36 bucks, then that's what we call a failed sell setup. Gap, it's a failed sell setup. And then it's a shock because of gapping over that red bar. But you know, I don't see any volume, but let me make sure I didn't lose my volume. No, that's there. HPE, this is another shock bar, gapping over. Oh, here, I didn't give you all the list. My morning list of credit spreads, here you go. All right, so there, let's first half hour, see if any of those set up. But that's a beautiful, beautiful shock bar that's holding pre-market beautifully. So that looks fantastic. I'm gonna put that in a window. Greg mentioned SDIG yesterday. Big old it's an inverse head and shoulders and bottoming pattern, converging 2050, wide range close. You know, market was kind of iffy yesterday, but it was still higher high, higher low. It's holding well. That also looks fantastic. Arlo, another shock pattern, gapping over here. Here's another failed sell setup, just like whichever one I said. It's just gapping a little bit too much for me, though. I would prefer it gapping to 950. And then my target would be like 10 and a quarter, but that's same pattern as the other. Same with Cream. Cream had earnings gapping over a red bar. You know, I just don't like that it's run so much already, but Cream, let's keep an eye on. AMC, if it can get over, it had earnings. If AMC can get over yesterday's high, then that is a put spread candidate. And we're already in GME put spreads, but if it can get over last week's high, that's a directional. Myrna is another similar one. Last week's high is a directional and put spread. Netflix, we're already in a put spread, but if it takes out Monday's high, that's a directional. So there's a lot of these that are just coiling with tight consolidation. Gapping down $1. So if this is gapping down $1, it can then take out yesterday's high, or actually it's preferably Monday's high because it's so close. Then that's a directional, maybe target 200. No pattern to me on that one. Zip, bullish gap, put spread idea, plug. Plug was in our weekend letter, and the stupid big gap messed us up. But that still looks good. Fizzler getting whacked. LMT bottom right is one of my favorites, LM Fizzler. All right, so Greg, what's that doing to our tan? Not bad, Greg. But what do you want to take? You want to take some profits under yesterday's low, tan?
We spoke in the room yesterday, sold half near the high of the day and put the stop under today's low while it was a choice. Well,
Well,
put the stop under 66 and change.
Well, you didn't give
Back
it.
half.
You didn't tell the ETF trader.
Hmm.
You gotta update them. That's where it's an official trade. And I'm just gonna move it under 71, which is a little arbitrary.